Hey everybody, this is Jose here. We are about to start in 30 something seconds. This is a sound check. Please go ahead and type a quick message on the chat box so I know that you hear me, and that way I know we are ready to begin the session. Nice to see you all. Nice to see you, Lisa. Very good. Perfect. So we just got 10 seconds to go and we begin. Here we go. We just reached the top of the hour, and therefore it is now time to go ahead and introduce the session formally so we can start. How are you, my friend? Very nice to see you as well from India. Very nice. Anyway, so let's begin the session, guys. Today is August 23rd, 2019. My name is Jose Blasco. I will be your guide. Today we are getting together again, just like yesterday, for longer term trading purposes. So we're going to be looking at the markets. Options will be the queen of the session. We'll be looking at different opportunities for directional trading, for non-directional trading, and ready to execute those trades if the market is kind enough to give us the opportunity. Before we start, of course, we have a disclaimer, so I'll do it quickly. The following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive when using our products, and that we take care of the introduction. Okay, so here is our flow chart. Here is our beautiful trade station, and we are ready to begin. Okay, seems that not too long ago China has been commenting on tariffs again, and it seems that the US markets are set for an opening to the downside. So that's nice, because that probably will spice up the juice available in those options. Okay, and we're gonna find options with a little bit of a higher premium than what we had yesterday at the market closed. At the market's close, which is what the scanner is utilizing. Okay, right? So when looking at the scanner here on the left, okay, all the scanning filters that we run. When it comes to looking at options data, remember, in TradeStation options data is end of the day. Therefore, especially for the credit strategies, okay, we will likely going to see a little extra premium, not expected based on yesterday values, okay, which is nice, okay, because when we sell options, of course, we want to collect the greatest amount of premium as possible, okay. So anyway, let's begin the session here, and we'll start like we did yesterday. We will begin with non-directional trades. By the way, yesterday I told you that I was going to do a little extra research when it comes to briefing.com, and unfortunately I'm not fully sure what they have done or what the intention was there, but briefing.com used to be a fantastic website to check earnings, and really I spent a lot of time yesterday looking at the website from every single angle. Unfortunately, I didn't find a way to get the same type of screen that we used to use, where the information was very clear, easy to understand, accurate, and easy to find. It's not the case anymore. Therefore, starting from now on, I will be utilizing Yahoo Finance. I want to give you access to a tool that is free to check earnings, and I think that Yahoo Finance will probably be the best choice in this case. Of course, some of the trading platforms that you may use may have earnings data in them, and that probably would be more accurate. Okay, so for most of my trades, I personally like very much to look at earnings information in Thinkorswim, which is pretty nice. Okay, but again, if you're not using that platform and you wanna a free resource on how to check earnings information, then we'll be using Yahoo Finance, okay? Because in the session I like to keep it as simple as possible. We are dealing with TradeStation and TradingView, so no need to add more platforms, okay? So I would rather use a free website to do that, okay? There are more. Yesterday I believe someone was using finviz.com as well. But again, by doing some research, I believe that Yahoo Finance probably will be the best substitute for our sad story with briefing.com, which unfortunately they just messed up that website that used to be very neat to check earnings information. Well, it's not anymore, okay? So things change in life, and it's our job to adapt, okay? Anyway, so let's begin. So we're gonna start with Adobe. So what I'm gonna do here, there is a little box here. It's not too easy to find, to be honest. Okay, when you click on it, you have the blue frame. But if you don't click on it, okay, it's gray. So it's maybe you don't see it unless you pay attention. So this is where you would want to type the symbol Adobe. Then you click on that symbol or hit enter, and here you will be given a list that clearly states that the next earnings will take place on September 18. Well, September 18 is a long time from, if you were to count the amount of days from now until then, it's plenty of time, which is great for non-directional trading purposes, okay? So we're gonna go ahead and click on Adobe to see what the chart provides us with, okay? And that way we can see if there is an opportunity to be executed or not. So first of all, we got 47% probabilities statistics with pre and post market data. If I switch to regular session, let's see what that 47 stays as 47. So I'm not very happy about this, okay? I am really not very happy about this. Let's go ahead and switch again to pre and post market. 47, so it's about the same, okay? It's about the same. And normally we like the 50s. You have seen me at times use 49, also 48, okay? But now we are 47.6. So I'm gonna say that if you were to use Adobe for a non-directional trade, I'm not gonna say it's crazy, because it's not. But at the same time, I would rather explore other opportunities to see if other opportunities provide us a better setup. And then plan the trade then, because Adobe it's not the best starting point when you see the UFO statistics to be quite low, okay? And by the way, this is not an anomaly or anything like that, okay? A minute ago I just said that our job is to adapt, okay? So here's another reason, another way or another market situation where we need to adapt to it. When that value is quite low, like it is right now, what that means is that the way that stock is being traded by the big players that trade that stock, okay, could be hedge funds, could be market makers, could be whatever they are. So those big players, they have the tendency to cancel the orders if they don't get filled. Okay, that's why the performance metric is quite low. With other stocks, it's not like that. Okay, and this somehow that statistic reveals what's happening behind the scenes when it comes to what those large market players do. Okay, so we cannot fight this. We need to adapt to it. Okay, we cannot fight it, and therefore, that's what we have. Okay, so something to be respected. Okay, some stocks will give you more probabilities than other because they are controlled by the large market players that trade them. And in this case, we just discovered that the large market players tend to cancel their orders. Okay, so next one I'm gonna check. I'm gonna look at Let me see. So yeah, I'm just looking at the whole list. Okay, so maybe we can look at AEM. I'm not in super love with it because it's not a very high price stock. Okay, but maybe okay. So let's go ahead and check on the earnings for AEM. And let's see what we got. So okay, so interesting. No information about earnings, so then we are just gonna skip it. So we would move then to Biogen. Okay, Biogen, which provides earnings on October 21st. Last time it was July 23. So Biogen is certainly an attractive stock in the sense that being a biotech company, normally there is premium built in those options because they expect something to happen. My problem with that stock is that options are not necessarily super liquid. Okay, so let's look into it in case it works. So regular session is providing to us 48%. Pre and post market is providing 42%. So obviously 48 is better. So again, another situation where I'm not super delighted. Okay, not super delighted. And also in the case of this stock, even though we have UFOs above and below, yeah, so we are not really equal distance from those UFOs. So I'm not too attracted by this setup. Okay, and therefore I'm gonna look at other opportunities first, and if we were to find nothing, then I would go back and take a look at that one. So EOG, inputting here the symbol so I can get the information about earnings reports. October 30. Okay, so and that's good. We have pending data there, so the data just downloaded. Okay, we got 45.98 with a regular session. With pre and post market, the 45 becomes 43. Wow, interesting. 3 out of 3 that are not the best candidates for the trade. So JIS, let's take a look at JIS. Sorry, GIS, I meant to say. So earnings on September 18, so that is good. Pending data, so just waiting for the full download to take place. Altong, not sure I understand why probability of 47 and OB for non-directional trade seems like it would be less likely to move and stay in the middle of an Iron Condor. Well, in one hand, you are right. Those UFOs are going to be less powerful, pushing price less directionally. So I get your point. But when it comes to defining the extremes of the range that you will try to capture by doing an Iron Condor, then you would not have, I mean, I was going to use the word certainty. There is never certainty in the markets, but you would have much less certainty that those extreme points in the range are gonna really hold or not, because those UFOs are being proven as less reliable on that stock. Okay, other stocks will be a totally different story. Yesterday you saw other stocks with 50 pluses, right? So again, the performance stats reveals what the large market players are doing behind the scenes, and we have to be respectful for this. Okay, so get your point, Altong, but remember you also need to sell options where the extreme of the range will be to create an Iron Condor. So sell options above the red UFO, sell options below the green UFO, and if you now have less trust that those UFOs will hold, then it's kind of like you are selling options in the middle of nowhere, and therefore you add hope in the trade instead of adding proven probabilities in your favor, right? So that's why I'm just in situations like that, I'm just skipping that stock and going for the next one, okay? Because there are more, so we have a whole list to go over to find a better opportunity. Look, for example, this one is giving you 54. So what does that mean? It means that the institutions that are placing orders on the stock, if they don't get filled, they keep the orders, okay, or maybe they even add more, and that's why you have a much better performance metric here. Okay, so you need to understand the products that you trade, and of course it's impossible to understand unless you have certain tools, and in this case AutoUFOs give you that reveals that portion of information, as I was saying. So very good. So okay, so let me go back to the 55-minute time frame. Okay, let me move the chart down. Okay, so we're gonna have to load more. We're gonna have to load more candles to be able to see what's on the left. Okay, so pending data, PD on the upper left. Altong, okay, so you want the extreme UFOs to have a higher probability, makes sense. Yes, exactly. Because again, you are defining a range and you take the risk where the extreme of the range is. While the stock remains in the range, it doesn't matter if it's above or below, you're fine. But if it breaks the range above or below, beyond the range, now you're in trouble. So you want those ultimate extreme UFOs to hold. Okay, and the probability measurement obviously gives you an objective measurement of what's likely to happen. Okay, so just waiting for the data to be fully loaded here, so we can look at GIS. Looking at the list, we also have IYR. That's an ETF. Okay, so that's our housing ETF. So we'll skip the ETF. Normally ETFs got less premium built in. They could be very interesting for directional trades, but much less for non-directional. Okay, so what do we have? We have 54%. If we use regular session, if we do pre-post market, what happens? We got 48%. So then we will not do pre-post market. We will do regular session. And therefore, when planning this trade, on the upper side, we would have this UFO to lean against. That's one. And then we would also have this other UFO to lean against. Okay, so I'm drawing the lines there because I have loaded too many candles on the chart. Okay, and I just want to go back to my 55-minute with a normal amount of candles I have loaded, which is 500. But now I got my two lines here that show me where are my UFOs, and I know I got my 54%, which is a very good stat for a stock. Okay, so now since we may have an opportunity here, it is now time to bring Option Station Pro into the mix. So loading Option Station Pro, because now we need to apply statistics to find out from now until the next expiration date how far GIS is likely to move, and based on that we would be able to decide on which UFO to use, the one located at 57 or the one located at 60. Okay, so we're gonna be loading GIS. Okay, and without even thinking, as you have seen me do before, oh, interesting, this stock has no weekly options, only monthly options. Liquidity is okay though. Okay, so then I guess that we have no other choice than using 28 days to expiration if you want to do an iron condor. So I'm just gonna right click, analyze and sell an iron condor. Wait a minute. We are looking at 20 of September and we said expiration date is gonna be on the 18th. Okay, so we cannot do this trade. You know, it's kind of rare nowadays when you find okay stocks that they don't have weekly options. Okay, but yeah, so that's what it is, and I am looking at all expiration types including weeklies, and there are none in the list. Okay, Royce, can we use the auto climate version 2? Yes, absolutely. Version 2 is just a little update that we released, I believe it was yesterday, which basically has automatic inputs for red screen, so you don't have to change anything manually for red screen, and automatically you get the right colors. Okay, so nothing has changed when it comes to the process that auto climate runs. It's just convenience when it comes to not having to change inputs for the red screen. Okay, so absolutely, if TradeStation is asking you to update to version 2, go ahead and click yes. Okay, good. So what else do we have here? Johnson & Johnson, I believe we looked at this yesterday. Since every day I look at many symbols, so I don't want to be overconfident, so let me check very quickly. So Johnson & Johnson, oh, actually I was confused. Okay, so Johnson & Johnson have earnings on October 15. So let's go ahead and load Johnson & Johnson to see if we have an opportunity to plan on a trade here. So interesting, so we have lines here, so maybe that was a few days ago. Yeah, August 30. Interesting. Interesting. So it seems to me that we were planning on some trade, or maybe I'm probably just confused. So anyway, again, every day it's many markets that I check, and for whatever reason, Johnson & Johnson clicked to me like we looked at it yesterday. So 56% is what we get. If I look at a regular session, if I look at pre and post market, we get 54. So 56 is better than 54. Therefore, we're gonna move back to this level. And what we're gonna do is the same process. We're just gonna input J&J, Johnson & Johnson. Yeah, thank you, Lisa, for that. And then I'm just gonna look at August 30, analyze and sell an iron condor, which we may have it already actually. I have a trade here running with Johnson & Johnson. So let me put it all together so it will use less space. On my screen. Okay. So let me see. Getting the short, moving it there. And the last one, putting it here. That's an iron condor. And then I'm just gonna delete, and delete. So that way, what I have on the top, I now know it's an iron condor, which is a real position that is running right now as we speak. And what I'm gonna do using the below part is to replan on a new iron condor and see if this iron condor is valid or not. So how is that iron condor doing as we speak? That iron condor is currently creating a little bit of pain in my account real time, okay, in this execution that I have here with these particular strikes, okay? But let's take a look at what we can build with Johnson & Johnson, because the scanner has identified that market as a valid market for an iron condor, which may mean that the premium of those options may have gone up. And if that's the case, we may have an opportunity, okay? So looking at August 30, one standard deviation of price movement is pointing at 138.22. So that would be up here, 138, and we have a red UFO, so we are good with that. And then 124.26 would be actually lower than this one, okay, lower than this one. So yeah, I'm gonna have to look for something lower than that. It doesn't seem that there is anywhere close. Yeah, I'm gonna have to go back in time a little longer. So let's add more candles to this chart to find the data that we need. Oh, now I remember. Yes, now I remember. That's the one I was very picky about how much premium you needed. Okay, and yes, so Lisa, thank you for sharing that. That you did not get filled at that price. It's good to know. Okay, so maybe that means that we're gonna have to replan it differently today. Okay, so let's see. Okay, so what do we have here? So we have this setup. Okay, well, we have green UFOs below, we have red UFOs above. Okay, if I was to calculate the distance from here to here, okay, and I was to project that distance to the upper side, notice how this UFO it's really not in the right location. Okay, so maybe I would want to go for the next one, or even more ideally, okay, that one. Okay, but now we are creating such a major range, okay, which I'm not sure, well, I'm pretty sure actually that August 30 will not provide premium enough. Okay, so yeah, so basically we have a setup where it's either we're gonna use, sorry for that, it's either we're gonna use, let me change a little bit of the colors so you will understand better. So it's either we're gonna use, let's make it dark blue. Well, actually dark blue is almost the same, so I'll pick another color, we'll make it blue. So it's either we're gonna use the blue lines to create a trade betting on price remaining between the blue lines, which is the smaller range, or we're gonna go ahead and go for the wider range, which is 144 to 118. This, of course, can only be done by using a little bit longer term expiration dates, okay? So I'm just going back to my 55-minute chart here with the amount of data that I need. Okay, I have my lines. Okay, so the purple above and below, or the blue above and below. And the question is, how much I get paid if I do the 140? So if I do the 140, I get paid 34. Okay, 34. So that's okay. 34, we could do that. Yeah, we could do 34. I'm actually surprised there is so much premium there. And if we do the 120, okay, I'm gonna have to load more strikes, and I believe that then the whole option chain will go zero out. No, didn't. Okay, so the 120 would pay 59. Okay, so yeah, actually it seems that we could create an iron condor. It's interesting. Liquidity today is much better than what it was, at least what I remember. Okay, interesting. So guys, we have two options. Let's analyze those two options. So option number one would be to create a blue iron condor. The blue iron condor would be something like that: buy the 141 call, sell the 140 call. Okay, this would be done using August 30, 2019 expiration date. Okay, and then below the 120, we would sell the 120 put and we would buy the 119 put. Okay, so this would be the blue setup, and therefore I'm going to change color so we are all clear that blue goes with blue and purple goes with purple. Okay, so option number one, we can do this. Okay, if we use August 30, which is the one I'm using right now, we are fine from a probability standpoint as well, because with August 30, it seems that we are not likely to surpass 138 and 124. And in this case, we are pointing at 140, which is beyond 138, and we are pointing at 120, which is beyond 124. So in both cases, the trade seems to be reasonable and it should be okay. Okay, so we're gonna look into this one, but I also want to look into another one using the popular range to see what is more interesting. So we are doing 119, 120. Here we go. Okay, so if we were to do this, okay, we are collecting 21 cents. The maximum you can risk is 1. The distance between 119, 120 or 140, 141 is $1. So the most you can lose is 1. We want to collect 15% of the risk. So 15% of 1 is 15 cents. And we are being paid 21 cents. So this trade meets our rules, and therefore this is an iron condor that could be executed. Okay, and as the market opens, we'll reconfirm that this is the case. Okay, now while I'm gonna park this iron condor here and I'm gonna uncheck it, I will also want to observe and plan a trade where instead of using the blue range, okay, what I will want to do is use the purple range. Okay, and this could be done by buying the 146 call, selling the 145 call. Okay, and then on the bottom part we will be selling the 118 put and buying the 117 put. Okay, and this will be purple color because this refers to I'm just gonna put the blue range here. Okay, and this would be purple color because it would refer to the purple lines, not the blue ones. So in other words, you are capturing a larger range, which is going to be higher probability. But even though it's higher probability, you get paid less precisely because it's less probability. So the 145 with that expiration date pays you 9 cents only, which is not enough. So this would force us to use September 6, where if we use September 6, now we are suffering some serious slippage, okay? And even with that, we don't get the premium we want. So what if I was to do September 13? The 145, yeah, it's terrible. So what if I was to do the monthly expiration date? The monthly expiration date normally are the most liquids. The one without the word weekly is the monthly. which means that is the third Friday of the month. And if I look at the 145 here, so I get better liquidity, but still I don't get my 25. Okay, so yeah, so it seems that the trade to be taken is the one with the blue range using August 30. So it doesn't seem that the purple range is going to be a good choice. So 3 minutes or 2 minutes and a half from now, the market will open. So what I will want to do is I will want to confirm if the parameters of this trade are still correct. And if that's the case, then we'll just place the order. Okay. So yeah, so I guess that I'm just gonna wait because it's just like it's less than 2 minutes now for the market to open. So I'm just gonna be ready to execute. And also let's take advantage of this market opening, because right now you can see the ask is for the bid is 46, the midpoint is 21. Okay, so you know you can see that. But when the market opens, typically spreads widen pretty badly for a few seconds, sometimes a few minutes, depending on the stock. So I want to go ahead and observe that here in the option chain. Okay, I want to observe that here in the option chain. Look, I'm just gonna, on purpose, change symbol to anything, Coca-Cola, just to get the option chain totally zeroed out. I'm just gonna go back to Johnson & Johnson. No, funnily enough, it's not resetting it. Okay, that's interesting. Anyway, so you can see 32.38 for the 140. Okay, so keep that number in mind. The market is about to open in 45 seconds. So 32.38, keep that number in mind. And we will see at the market opening what's going on with that stock, okay? I believe I made this comment yesterday where I can see plenty of open interest here. So there is, as the name suggests, interest for those options. So again, when you see these things, there are many times where you place a very demanding order, like yesterday when I asked you to place the order for 40 cents, and many times you may get filled. Okay, there may be times where you don't, but many times you may. Okay, so it's always worth it, especially if you were to identify lack of liquidity, which today actually looks better than yesterday. But if you were to identify lack of liquidity, just be demanding, especially if you see open interest. And if not, don't trade it. Okay, so the market just opened. Notice how, as the market opened, we had huge widening of the spreads. Okay, it went to 33.10. If I was to look at, you know, my midpoint now, it goes from positive 81 to negative 81. So a midpoint is 0. Okay, so you can do this iron condor for 0, meaning that you would get paid nothing if you do it at the market price. Okay, how crazy that is. Okay. So again, this is because the market just opened, and this is an important lesson for you to learn, especially if you ever use stops on options. You may get massive amount of slippage if you get stopped out at the market open. Okay, so it's something for you to keep in mind, and you will see how the market may need a few minutes for all of this to kind of normalize and stabilize. Okay, and again, we know that that particular expiration date and Johnson & Johnson yesterday showed us not to be amazingly liquid, so we know that. So I'm not expecting this to be like the S&P options, but certainly we should see some improvement on the spread, okay? Because that is absolutely crazy to have a 0 here for the midpoint, okay? So you would never want to take this trade, okay? So we'll come back later to look at Johnson & Johnson to see if we can enter this trade later on in the day. You can see now, you know, there is a little bit of a improvement on the spread, only by 1 cent. So this is absolutely not enough. Okay, so we'll still have to wait. But anyway, it's good to see that this is happening. Okay, so anyway, so back to our list. Okay, we continue the process of looking for market opportunities. Okay, I'll come back to Johnson & Johnson. The next one in the list is Merck. Okay, Merck is another company related to drugs and, you know, health in general, and normally those stocks always carry some decent amount of premium. I said always, it's not always, but you know, very likely. Okay, so October 29 is the expiration date, sorry, the earnings date for that stock. Therefore, we got plenty of time in front of us. So the question is, do we have an opportunity or we don't? Okay, and it seems that yesterday we were looking into, or I'm not sure if it was yesterday, but you know, not too long ago, it seems that we were looking into that stock too. Okay, and therefore I will want to go ahead and load more bars to see if I can get the upper UFOs. Okay, no upper UFOs. Where is that? Where are we? Okay, so I guess it's many years ago. Yeah, this is like from 2000. Okay, yeah. So anyway, the good news is that I don't need to load all that data because I already did that, and as you can see, I had two lines on the chart, 89 and 90. That means that if you load many candles on your chart, you would get to see UFOs at those price levels. The current price is right here. We have new UFOs that form here. So you know what's possible. Okay, well, what can we do here? Okay, so let's go ahead and apply the process we always apply. We are going to, you see, the spreads are improving a little bit. Now it's 0.06. You see that? Okay, so things are improving little by little. So let's go ahead and click on Merck and look at what do we have when it comes to premiums available. If we look at next week, August 30, and we look at those 89s or 90s, okay, how much we get? So we got 12 and 4. So the only way to get something more decent would be to go for September 6. So 89s and 90s, we get 8, so that's not good enough. If we go for September 13, 89, okay, September 13 is providing both good liquidity and good premium. Okay, and if we do 20, then you know, we have worse liquidity and worse premium. Okay, but 89 is looking quite good actually. So now the question is, if I use that expiration date, which is September 13, it's looking to me that probably from a probability point of view, the trade will not work. Okay, you can see I am in this trade as well. So we did plan this trade from some time ago, and this trade is running. So I'm just going to do the same thing I did before. So delete, and then I'm just going to move this here, and then I'm going to delete, and finally I'm going to move this here. So TradeStation will recognize it's an iron condor. Okay, and I can now minimize it, and it uses no space, and also it's nice to have the name here, so I know it's an iron condor. And yeah, so that was a trade that we are doing here with August, okay, August expiration. So this trade is currently producing $26 of profit. So this trade is currently creating some profit in the account, okay, so working in our favor. But now we are planning on a new one using September 13. Okay, so using September 13, if I looked at the +1 and the -1 standard deviation, notice I got September 13. Notice my position is unchecked. That's important. The one that is checked is the one with September 13. Okay, so with that, it says 90.55 and 82. So therefore, I had a problem because I was very attracted to the 89, less attracted to the 90. Okay, but it could be okay because it's 29 cents. But the reality is that I could not do any of those because statistics suggest that stock may move all the way to 90.46. And obviously that would surpass my 90.14. So no trade with Merck today. We have one running that seems to be profitable, so nice, but no trade with Merck at the moment. Okay. Yes, Lisa, thank you so much for that. Again, it's so many trades, you know, that I look at, you know, in a regular basis, and also since we didn't do a longer term session last week, and this week we are doing two, so I just got a little confused with the symbols. Okay, so I appreciate your feedback there. Anyway, so yeah, so T-Mobile, well, I'm not gonna plan a trade on T-Mobile, just like Verizon. I will skip those two. Why? I think I said that before. Those stocks, for whatever reason, I guess because they belong to the utility sector, those stocks are not expected to move at a very fast speed anytime soon. And it doesn't mean they don't. Sometimes they do. You can see here T-Mobile went from 72 to 80 something. That's not bad. But again, most of the times they are not expected to move much. It's almost like they're seen like they're an ETF. and therefore, for non-directional trades, it's almost, I think, like maybe once in years or twice, I managed to plan on a trade that was making sense from a risk reward point of view. So basically, I just given up on them because it's a waste of time for this type of trades. Okay, even though the scanner identified it, the reality is that when you plan the trade, you are likely to be disappointed. Okay, so we look into WDay. okay? So W day, let's first look at earning dates. So W day has earning dates coming on, August 30, okay? So yeah, so then we cannot do anything here because we will need to be out of this trade today. And obviously that's, I mean, it's not gonna be possible. I mean, it doesn't hurt us to look at the 207 to see if there is premium in the 207. If there is, I'm telling you, we're gonna sell them right now. But I would be shocked if we have premium enough using August 23, which is today. Interesting, it's not. Oh, W day, yes, sorry for that. So W day, so the option is loading. So August 23, we're gonna look at the 207, and the 207 is paying you 2 cents, okay, which is what I was expecting. Of course, this option expired today. We could not expect much more from them, okay? Cool. Okay, so yeah, so back to Johnson & Johnson, okay? So we're just gonna look to see if those spreads have improved and we can enter the trade. And if that's the case, we'll do. And if that's not the case, then we'll pass and we'll move into directional trades, okay? So what do we have? Well, you know, you can see that this has moved up now to 8 cents, okay? So, I mean, it's good that it went up to 8 cents, but really we are not seeing the improvement in liquidity that we would expect, okay? Still, yeah, a little bit of an improvement, but still not enough for us to have a viable trade here, okay? In any case, the data you saw on the option chain earlier was the data available at the end of the day close, and that data was much better than now, which means that liquidity may keep improving throughout the day. So please go ahead and yourself take a look at Johnson & Johnson during the day, and if at any moment in time later in the day you see that liquidity has improved and you can get a decent amount of premium for the trade, then just go for it, okay? Because the range is defined and is valid. And you know, I want to remind you one last time, in case you do it yourself, that we were looking at the 140.141 and the 121.19 using August 30. Okay, so if you want to take a screenshot, I'll leave it here just a sec in case you want to double check this yourself later in the day. Yeah, good. Yeah, I'm reading. Yes, perfect. Great. Okay, so let's continue. So let's move into the world of directional trading, okay? And when it comes to directional trading, of course, I'm gonna be looking at trades and plan them like you need them, okay? And what I mean by that is that some of you may already have multiple trades that are long in your account, and you should not take the trade I'm about to plan because maybe that would be too much delta in your account. Or maybe you have too many shorts in your account, and if I plan bearish trades, you know, I will plan the trades, but it doesn't mean you have to take them because you may already have too many short positions in your account. So because all of you have a different account and have different positions, I'm gonna plan the trades like you need them. Okay, so I will, when a trade is valid, I will just say it's valid. But having you execute the trade or not only depends on you, not only depends on you want to execute the trade with real money or paper money, as I always say, but also it depends on what else do you have in the portfolio. Remember that we covered portfolio management sessions in the sharpening, right? When we did sharpening sessions, and we talked about, you know, balancing out your delta. We talked about, you know, using a hedge in the portfolio. So if you don't know what I'm talking about, make sure you watch those sharpening sessions, okay? And, you know, that way, you know, we'll be in the same page, okay? Yeah, Royce and Lisa. Yeah, the look and feel for AutoClimate, just like for AutoUFOs, is preset for the app. So you will not be able to change the size of the dot or the colors. This is preset. Okay, guys? And it doesn't matter if it's 9.5 or 10, it's the same thing. Okay? Anyway, so let's begin with directional trades, okay? And again, we have a long list of stocks here. We have 13 stocks. Yesterday, by the way, we got into Twitter. Anyone got filled on Twitter? Okay. I am in Twitter, okay? I remember I placed an order in the session with you guys and we got filled, and here's the Twitter trade, Okay, you can see right here, this trade is just making a tiny bit of a profit, nothing major, but you know, that means that now Twitter is moving your way. And by the way, if you did buy Twitter at a proper price with a proper shaving, okay, you should be okay. In my case, you know, I just did it on market price, and therefore I'm just making at this moment just $1, which is nothing. Okay, but again, remember, with Twitter we have a confirmed climate that continues to be confirmed today. When the market goes up in Twitter, it tends to last for 7 candles. Right now it's candle number 4, so we have many more candles to come on the way to our target, and hopefully we'll reach our final target. For now, if you remember yesterday, we got 2 green UFOs on top of each other. The first UFO did produce the move that is happening right now, and this is even with having Twitter down by 0.45%. And this again has a lot to do with how the US market has opened today, probably due to those international political issues with trade tariffs and all that stuff. Okay, so but anyway, so this trade we have it. So since we have it since yesterday and it's very fresh, so I will skip Twitter. So let's begin with YUM to see what we have. Okay, so with YUM, we have a confirmed climate, of course. I mean, it's always good to double check, even though we don't need to, in the sense that the scanner is doing that for us, isn't it? So confirmed climate, okay, confirmed climate. Current candle in the climate number 4. When the market goes up, it tends to remain in that climate for 7. So if we enter now, it's not too late. 54% is the probability for those UFOs with regular session data. If we look at pre-post market, it becomes 42. So we better use regular session. It gives us a better understanding of what's available. And then if we wanted to enter this trade, 116 something is what we want. So guys, good news and bad news. Okay, good news and bad news. Around the price of the average, which is around 117, we have a green UFO. But the problem is that when the market up and down today, again, given what's happening to the whole US market as a whole, remember, we always talk about stocks are fragile. They are depending on external forces, right? So that stock up and below that green UFO and clearly went all the way beyond, which means that those on-field orders have been canceled. So even though we still have the green UFO on the screen, you cannot rely on it, okay? And therefore, we are not having a setup with a UFO lining up with the average the way we would like to. In this case, we don't have that. So what do? Well, then we go for the next one. Okay, so what is the next one? Since I started from below, let's move up and let's stop here with TAL. So TAL Education Group. So let's take a look at what we have. Okay, and what we have here is a stock with a confirmed climate. Now, careful here because the current climate has taken already 5 candles, where when the climate is up, normally is 4.46. So, I'm not going to say it's wrong to take this trade, okay? Which, by the way, actually we do have a setup with the average being 33.47 and this green UFO being located at 33.5. We do have a setup. Well, actually, we may not because this is 47. We need it to be more than 50, isn't it? So let me see. Well, yeah, so we don't, okay? 37 and 47, it doesn't qualify. So, I'm taking back what I just said, and we move now to AT&T and see what we've got. So, current climate is confirmed, 6 candles into the climate. When this climate is up, it tends to last by 7 candles. We have been already 6 candles in the way, so it's not ideal. Okay, it's not ideal, even though I'm not saying it's not possible. So let's allow for TradeStation to load the whole set of candles, which should be soon, and then we'll look at stats and everything and decide if we have a trade or not with AT&T. So should be there very, very quickly. Come on, TradeStation, you can do it. Nice. So we got 58%. That's a very nice stat for a stock, okay? Very, as I told you before, AT&T, Verizon, T-Mobile, those stocks, they are seen as ETFs in the market, I mean, they normally move very slowly. That's the downside, but they are quite stable instruments, okay? So looking at pre and post market, instead of 58, we got 64. It's even better. Okay, so I would want to use 64. I mean, this is rare, my friends. Seeing a performance metric of 64 in a stock is rare. In futures and forex is normal, but for a stock is rare. Okay, which tells you a lot on how institutions really rely on those stocks when it comes to building their portfolios and so on. Okay, so anyway, problem to be able to get into this trade, we will need to find green UFOs around 35, which is the average value, and around 35, as you can see, we don't have anything at this price. Okay, so even though it's looking very good on paper, we don't have a trade, so we go for the next one. SIMC, Symantec Group, Corporation. Okay, so confirm climate. Okay, this one I'm gonna pass. Okay, the reason why, we've been already 8 candles into this climate, where the fact is that when this climate goes up for that stock, statistically speaking, it tends to last 6 candles, but we've been already in that climate for 8, right? So can it last more? Of course it could. Is it likely? Not so likely anymore, right? So therefore, we're gonna pass on this one. Okay, so I'll move to ROKU. Okay. So looking at ROKU, and I can see 49.58%. If I change to pre-post market, we got 52%. So that's good. That is good. Yeah, again, that is good. Okay. Now, what is not so good is the fact that we spent already 11 candles in this climate, where statistically speaking, that type of climate tends to last 11 candles for ROKU. And we spent already 11 candles. Okay, so we are basically late to being able to enter this trade, and this always puts you in a bad situation. Okay, so my recommendation here, I mean, it's not crazy. We actually have a setup with 133.6. It's the average, and 133.6 falls in the bottom part of this UFO. But we do have a UFO and the average, okay? And remember, with stocks, we are quite relaxed with the location of the UFOs because stocks are fragile, they depend on external forces. So you can certainly plan a trade on ROKU and go for it, okay? If you were to do it, okay, the recommendation, as you know, would be to do it to use half of the size you normally use, because we've been in this climate already for not too long, but almost too long. Okay, so that way, in order to mitigate the risk, you will want to cut the size by half. Okay, if normally your trades you risk 1% of your account, so in this case you will want to risk 0.5% of your account and buy X amount of contracts to do that. So let's plan the trade, but keep that in mind in the case of ROKU. Okay. By the way, also very quick, let's check for the earning reports. So earnings for ROKU, that would be November 6th, so with plenty of time. Earnings were just recently reported in August 8th, so that's good. Okay, so let's go for it. Okay, so climate is confirmed. 60-minute time frame, weekly time frame would be used to set the targets. So enabling AutoUFOs, looking for a red UFO on where to set the target. Well, we may be in a case where the stock is making all-time high. Is this the case? Yes, that stock is making all-time high. So there is no target, okay? There is no target because we are making all-time high. Again, everything in life got pros and cons, okay? If you are making all-time high, it means that you don't know when to take profits precisely. So what you will do is that you will just keep trailing stock, trailing stop. And the good news is that when a stock starts making all-time high, there is a potential opportunity for the stock to go very, very far. You may remember some time ago, we had an example of that. That was a good one, a very nice one actually, with Starbucks, okay? Where, we had this opportunity, okay, and then we had this massive move in price in the price of Starbucks, okay, until then there was a lot of profit taking and Starbucks came back down. But basically we were getting into the trade somewhere here where the little hand is, okay, and we were able to benefit from such a strong push, and therefore we were able to exit this trade for a very nice profit, okay. And why is that? Because making all-time high, that also means that the stock had no red UFOs, no sell orders, and therefore, if no one sells, it's very likely to go higher and much higher. Okay, so what do we have with Starbucks? Okay, so 46%. Sorry, not Starbucks. Go back to ROKU. Let me see. There is a buffer of 50%, if I remember, and that will give us a 15 or 16 more candles. Yes, exactly. The buffer is 50%, but once you surpass that number 11, right, then you need to go with half the size for those additional candles up to 15, 16. Okay, so that's why I said let's go for it, but remember, with half of the size. Okay. So what are we gonna do? Well, there's no target. Okay, so since there is no target, we're gonna use the longest expiration date as possible, which is the one lining up with the earnings date for ROKU, which I'm loading right now. Okay, the earnings date for ROKU, which is November 6th. So when looking at ROKU options chain, we have November 15, and that is the one that we will use for this trade. Okay, when looking at ROKU, because this is a trade to make money to the upside, we would be buying, analyzed by a single call. Typically, we would do a vertical spread, but that you cannot do it unless you have a target. Okay, so then we would go with a single call, which I have just inserted here. Now, it's important, okay? We said the entry price for ROKU, okay, would be around 133.66, okay? Well, since we have a UFO here, and the top of the UFO is 137.96, I will use 137.96 as my entry price. So 137.96 will be my entry price. And what I want to do is I want to pick an option that when I buy it, which is at that price, right? I want the option to have a delta of 30, which this one got 45. In other words, that option is too close, and therefore I'm gonna push it up just by a little bit. If I buy the 155, my delta is gonna be 41. If I buy the 160, delta is gonna be 37. I'm actually surprised of that. Yeah, 165. So let me take a look at this. 165. Yeah, liquidity is fine. Yep. Yeah, interesting. Yeah, so yeah, trust the values. That's what it is. You know, computer does the math better than me. So that's what we got, and that's what it is. Okay, so you will want to buy the 165 call that expires in November 15. Now, this option would be priced, if you get it at the midpoint, it would be priced as $885 per contract. What does that mean? It means that the most you can lose is $885. That's the most you can lose. But you need to keep in mind that this is your risk, okay? If your account was to be small and this was too much money to be risked, then that means that this trade is not for you and you should not take this trade, okay? If you are okay with a risk of $885, then go for it. Or actually, it's not that. The risk that you will have is more around 800, because the value of the call will drop from 885 to 200 if the stock drops from the current value 140 to the desired value at the entry price, which is 137.96. Okay, so when the stock drops, then the price of the option will drop as well from 885 to 802 in this case. Okay, so basically you have $800+ of risk in this trade, and you know, if you like it, you can go ahead and take it. To take the trade, you would just place an order the way I'm just doing. You would obviously need an activation rule. I'm going to use market as well, because being a paper money account, as you know, TradeStation will not fill me. Okay, so I will use ROKU. I will set my entry price at below or equal than 137.96. Okay, I'll click OK, and then I will place the order and I will be ready to go. Okay, that's it. The order is in. Here in the manage section, you can see I have my order here with ROKU. Okay, yesterday I had an order with Merck where I got filled. Sorry, an order with Twitter where I got filled, and now here is my trade running as a position, not as an order, but as a position. Okay, cool. Okay, so let's keep going. We got 3 minutes to go. Okay, so what I'm gonna do is switch to see if we find a short. So looking for shorts. Okay, and let's look at Tesla. Okay, so Tesla, TSLA. Yeah, Royce, if your number is different than mine, is because you are using a different amount of candles. So the amount of candles I am using on my chart when using auto climate is 500 bars. So if you use 500 bars, you will get the same figures as me. If you use different or more, then you will have different figures than me. Remember, I said that yesterday, it is not critical that we have the same exact figures. Basically, those statistics are there just to avoid you making a mistake, right? So if you are too late to the party, no matter your settings, you will have a way to identify that you are too late to the party. That's it, okay? Now, of course, the greater the amount of candles you load, the better the stats, but also it will slow down your computer and stuff. So remember, this is not a measurement that is critical. It's not like the UFO that gives you the entry price or the exit price. That is critical. Okay, this is just a tool to tell you which is the direction in which should you trade. Should you go long? Should you go short? Should you not trade? That's key, because most trading methodologies don't teach you when not to trade. Well, you know, I did teach you when it's time to not to trade, which is when the climate is not confirmed, right? So then you don't trade. So that's very important. And then when it's time to trade, thanks to this measurement, you know if you're still on time or it's too late. That's what this is all about. So it's not critical, even though it's very useful, but it's not critical. Okay, so it's fine if you have different figures compared to mine, guys. So we have Tesla. What do we have? Well, I have no information about when the next earnings will be. Oh, sorry. Yes, I do. I got confused with the window on the left. October 27th. Okay, that will be the next earnings. The last one were July, the next one October 22nd. Great. So we have time in front of us, which is the normal thing to be expected. We have a confirmed climate, 3 candles into the climate. When the climate is down, it tends to last 5. So we are not late to the party, still okay to trade. Average 223. So the question is, do we have any red UFO around 223? At the moment we don't, but wait a minute, we are looking at regular data, regular market data, which is 51%. If I look at pre and post market, that becomes the same 51%. And now I do have a red UFO around 223. Okay, so now I do have an opportunity to enter short Tesla. Okay, so we're gonna plan on this trade. Okay, so to plan on this trade, I'm gonna turn this to weekly. Step 2 in the flow chart, isn't it? Re-enable my AutoUFOs. So I'm gonna get to see where are the buy orders, okay, in that market. So let's see where they are. They are all the way here. So for Tesla, okay, for Tesla, we would want to take profits at 172.95. Okay, 172.95, that would be our target. The current value is 218, so we are looking at a $50 drop. That's a pretty impressive drop, okay? We may not get there from now until October, but remember, we have seen these cases before. It's actually nice to have these type of setups where potentially you have a lot of room for movement, and because we're going to be trading our stops, okay, to follow the price of that stock, you are likely to exit the trade somewhere in between the current price and that final idealistic target, and probably you will not reach that idealistic target. When they are so far away, then it's less likely to reach them, but still you are likely to catch a decent move, and we're gonna go for this. Okay, so how should we set this trade? Well, first step, okay, we just surpassed the time to conclude the session, so I'll just plan this trade and then we'll go. So the first step is to define your entry, which is gonna be that red UFO, which is 223. So 223 is your entry. The final target we just said is going to be 172.95. So if I take this $50 move that we just identified is possible, and I divide it by the daily ATR, which is 7.80, this tells me it may take 6 weeks, and because every week is 7 days, 6 times 7, that's 45 days. Okay, so that may be a 45-day trade, assuming that we're right. So let's go ahead and bring the Tesla option chain to see what we have that provides at least 45 days, but also not only that, we also want to find an expiration date lining up with October 22. Okay, so October 22, the closest is October 18. That provides 56 days, which is more than the 40 plus days that we need. So that's perfect. So what are we gonna do? Right click to analyze and buy a vertical spread with puts. Okay, I will go ahead and input 223 as my entry price. That's what we just said. I will go ahead and pick an option below my target. Since the target is 172, I will use the 170. And now I want to find a delta of 30. Okay, 30. So 225 is giving me 37. Okay, so I'm going to move down to 220. That's going to give me 32. If I move to 215, it's less than 30. So it seems that 220 is gonna be the one. Okay. So here's the trade. Okay, here's the trade. If Tesla, okay, if Tesla, wait a minute. Okay, I'm not having the drawing tool working for whatever reason. So if Tesla goes back up, follow the hand, and reaches 223, which is right there, we will buy the bear put spread, which is made of buying the 220 put and selling the 170 put, and all of this is done using October 18, 2019 expiration date. This is the trade that we just defined. Okay, so I'm just gonna place the order, and after that I will wish you a very good weekend because the session will be over. So we are buying the 220 put and selling the 170 put using October 18, 2019. Activation rule, check mark, price, Tesla, add less than or equal to, more than or equal to 223. That's the condition. And again, in my case, I'll use market because of course this is a simulated account. Okay, so here is placement of the order. Yes or no? The answer is yes. So the order is in the system, and you can see now I have a spread waiting to get filled on Tesla, while I have a call waiting to get filled on ROKU. Okay, and the trades are in, and that's it. Okay, so let me see. Did I forget something? I don't think so. I think we're good to go. Yep. So wonderful, guys. We're done for the day. Okay, quick reminder of what's gonna happen in a few hours from now. So if I look at our website, tradewithufos.com, and you look at the get together calendar, anyone guesses what I'm about to remind you guys? Type it on the chat box. What is it that to have a good nutrition in your life you should have every day in the morning when you have breakfast? It's your supplements, isn't it? Well, trading is the same. Okay, so in a regular basis, make sure you get your intake of vitamin T. Okay, so Brian will be joining you at 7 p.m. US Eastern Time. Here we go. Thank you so much, Lisa. Okay, so make sure you don't miss it. Again, Brian is it's building up stuff that is going to be very powerful for you guys. And what would be sad is that later in time you realize, oh my God, this is really helping me, but you have missed prior sessions, and then you need to go back and watch many videos in one shot. So make sure you just keep going with the flow, and continuously you keep attending all those sessions and you don't miss them. Okay. And by the way, also I almost always forget to remind you, please go ahead and give us a thumbs up on the YouTube channel if you're happy with the session. And also, if you're watching this recorded and you haven't subscribed to the channel yet, make sure that you click on the bell so you get notifications as well. Okay. Yes, Lisa, that was yesterday, but we have another one. Oh, wait a minute. Did I just got confused here? Yes, I believe I got confused. No, I didn't get confused. Yeah, that would be later today. No, that was yesterday. Sorry, guys, I got confused. So yeah, okay, forget about it. I didn't say anything, guys. I guess it's the end of the week and I got confused. So the vitamin T are coming back on Monday. Okay, sorry for the confusion, guys. Lisa, thank you so much for helping me clarify this. But anyway, guys, a pleasure to join you as always. Hopefully the sessions are helping you to progress in all the different ways that you need, depending on where you are in your trading. If that's not the case, make sure you speak up, okay? Send us an email, contact us. If you need to talk to me directly, just send an email to reach@tradewithufos.com and just tell the team that you need to talk to me directly and send your questions. I'll take care of it personally if needed. I'm here to help you guys. I am totally committed to it. Okay, so guys, make sure you use the resources because this is about teamwork, as I said a million times. So please don't be shy. That is the very last thing I would wish. Okay, so keep up the good work, everyone. Enjoy the weekend. After the market closes, you still have a few hours to go. In my case, here in Asia, I still have just a little bit extra time for a little more trading, and then I'll be in bed. Okay, so for me, the weekend is already right there. See you next week. And again, super pleasure to join you guys. Take care, everyone. Bye-bye.